this is actually the first trade of the week. We are on the Monday today, and this long trade was made in the US session. We will go over the hard time frames analysis, the way we saw this particular Forex pair moving, its own price action, and so on. Now on the euro US dollar 50-minute time frame, here you can see this is the break of the structure we were trading. We had this short structure to the downside, I mean, and we were trading this break of the structure with confirmed imbalance, with nice support formed, and we traded this move to the upside. As you can see, our entry here was at this arrow, stop loss below the structure, and then our exit. So in this case, we were looking for a classic base hit one-on-one risk and reward ratio. And please, if you are new to our trading style, don't neglect the one-on-one risk and reward ratio trades, because those are let's say ratios where you focus on higher win percentage and of course on lower potential drawdowns, in other words. And of course in trading you can have either higher win percentage and base hit risk and reward ratio, such as 1-to-1, 1-to-2 in terms of risk and reward ratio, or you can have low win percentage and then of course higher risk and reward ratio trades. So depends on your trading style and what is your goal with your trading edge. Now in this case, of course, when you focus on those classic base hit trades, then of course you can compound your trading account very quickly. You can grow your account very fast with low drawdowns when you focus on those kind of trades, because if you take a look, for example, at your trades, you can see that if you are looking for higher risk and reward ratio trades, then of course most of the time the price is not even hitting your target and then it's reversing. So when you focus on those base hits, 1-on-1, 1-to-2 risk and reward ratio trades, then of course that is not happening much, and of course this is the power of this particular risk management. Now let's go over the charts. Let's do our analysis the way we approach this particular pair today. So let's go to the charts. So we'll start with the euro US dollar daily time frame. So this is those are the charts that we covered today with our students, and this is what we saw. So on the daily time frame, what you can see here is that we had this move to the upside over the last couple of days with strong moves. Price created this kind of a new high. Price broke all those short-term highs up here, and then on Friday we had this retracement, and today what we noticed was, as you can see, price kind of swept the Friday's lows here. So our idea was to look for potential bounce to the upside in this bullish momentum. So that's what we saw on the daily time frame. Now if we move on to the 4-hour time frame, what do you notice here is, as you can see, on the 4-hour time frame, price formed this sell side liquidity. As you can see, the previous 4-hour lows, which stand there as a sell side liquidity, as a support, and we had also this bullish 4-hour imbalance, as you can see, visible between those three candles. So this was the imbalance, and in this case we had combination of fair value gap. This is what we call this imbalance. So we had imbalance, fair value gap level, and we had also this sell side liquidity, the previous 4-hour lows, as you can see, formed here. So what happened today on the 20th of October? Price, as you can see on this 4-hour candle, price swept the previous lows. And when you see like price spiking that level, then of course and closing actually above this level, you can wait for potential market structure shift. So when the market is moving, sweeping this particular area, the previous sell side liquidity, then on the lower time frames, what you're looking for is a potential change of the structure, to the upside in order to trade potential bounce to the upside. So if this is, for example, the 4-hourly time frame, then on the lower time frame, such as 15 minute, for example, then you can look for this structure shift to the upside. And this is exactly what we were looking for today on the euro US dollar. Now let's go to the next time frame on the 1-hourly, just for information for the footprint of the price action. You can see this is the 4-hourly low, and what happened here, as you can see, market sweep this level with this spike, and then the next candle also formed this higher swing point. So this is very good information for us to start looking for potential switch, kind of a rotation to the upside, and then of course using the lower time frames such as 15-minute time frame. Then of course our idea is to look for that continuation higher once we have this nice structure formed. And if you go to the next time frame, the 15-minute time frame, that's where we got our shift. That's where we were looking, if you remember from before, we said that if we have this structure to the downside, then of course your idea is to look for this break of the structure. So if we have like price forming all those lower low, lower highs, then of course your idea is to wait for this sweep of the hard time frames liquidity, and then wait for this structure, break of the structure to the upside in order to trade potential rotation higher. So this is exactly what we got here. What we notice here is we got this lower high swing point, we have this hard time frames liquidity, and once the market swept this liquidity to the downside, we had nice rotation to the upside. So this is exactly what you want to see, right? When you see liquidity is taken, you want to see immediately a reaction to the upside, and this is exactly what we got here. As you can see, I marked this level up on the previous short-term high here. We have this hard time frames liquidity, and once this liquidity was taken, market immediately reacted with the new higher high. What we had also here was nice confirmation. We had this 15-minute time frame imbalance, the fair value gap level, the fair value gap, and in this case, what do we see here? Market slowly retraced into the discount area. As you can see, around 50% retracement, a little bit more, and this is exactly your break of the structure, confirmation of the market structure shift. So as you can see, we have lower low, lower highs, we have this sweep of the hard time frames liquidity, and then immediately reaction with a new higher high, price breaking this short-term highs, leaving us with this bullish imbalance fair value gap zone, and this is your confirmation to look for a long setup here. So that was the plan, to look for this rotation to the upside in the US session. So in the London we have downtrend, and we were looking for this rotation to the upside. So this was our entry, as you can see. As you saw also from the chart, from the first chart of this video, we were looking for this one-to-one base hit risk and reward ratio trade, and as you can see, after our entry, market, as you can see, tested few times this support. As you can see, why the patience is very important. Once you have entered into your trading setup based on your trading plan, you have to stay patient. You have to let the edge play out on the long term, because one trade doesn't matter, the result of one trade doesn't matter, but what matters is that you have followed your trading plan on this one trade. So this is very important. This is very important mindset. So on the long term, of course, you want to let the edge play out, and in this case, you have to have this patience. Once you're in, as you can see, market was spiking for more than 1 hour. As you can see, we had a lot of spikes. Market was building that support here, and once, as you can see, once this support was really built on, then we had nice rotation to the upside, and our target was hit. So our stop loss was below low of the day, below the structure, and this is the trade that we made today. So once you entered into the trade, of course, you have to focus on the risk management. You let the edge play out. If you have followed the rules, then of course you have to just stay patient, let the market either hit your stop loss or your profit target. So this is the mindset you should have. So don't worry if it's a winning or losing trade, focus just on execution of your trading process on the long term and you will be successful. So that's the mindset you should have when you're trading. So hopefully you learned something from this video, and of course we catch up soon. So take care.